As if we'd planned the whole thing. Of course we planned the whole thing. I've got Sally Mitchell with me, senior broker at The Mortgage Mom. Sally, good morning to you.
Good morning.
Very good to talk to you again, Sally. Just interested in hearing what Erica and Will have to say there about the world of business right now, the world of interest rates, costs of borrowing, all these things going on. And we know how closely, particularly when Will talks about that short-term, those in short-term interest rates, how much it costs the UK government to borrow over a 2-year period. That's closely linked, isn't it, to the mortgage market and how much it costs a household to get a fixed mortgage for a couple of years.
Yeah, I mean, everything affects the mortgage market. As a mortgage holder, what you pay every month is closely linked to the base rate, to inflation, to swap rates, to the gilt curve, or which I rather like the sound of that, a gilt yield curve. Sounds marvellous. So all these things, and the cost of living, of course, it all feeds into what people have to pay out every month. And it's quite a complicated picture to unpick, because any one of those things can cause interest rates for your mortgage to rise. So, you're sort of standing at the back of the batting cage, furiously trying to beat off all these baseballs that are coming at you. It's very, very hard.
And I guess you chuck into that as well, if these businesses that want your money, they can be a bit competitive as well. And that can almost, if they're more competitive, that can bring down the interest rate you might get. And if they're less competitive, they're thinking, I don't really want a piece of this, does that sort of make rates go up a bit as well? Yeah,
I mean, that happens a lot. So in the last few months, ever since the mini budget, we have seen so many of the lenders, all the lenders, in fact, change their rates, increase their rates, sometimes at extremely short notice. So Santander being the most recent one yesterday, where, if you had an existing case that you wanted to put to them, you had till 10 o'clock last night to get it submitted. Otherwise, the rates that you were looking at did not apply. And that can be as a result of simply being too popular. And this is how crazy it gets. So a lender, doesn't want to be number one in the hit parade all the time, because it just means that they're lending money out at perhaps less competitive rate, also more competitive rates, and they can make more money. So they will often withdraw, reprice, and then re-enter at a higher rate, because they don't want to be number one. They don't want to get rid of all their money at a certain rate. They want to make more. So again, another thing that means that, what you can be looking at today, rate-wise, is not necessarily going to be there tomorrow or even tonight.
Has that changed at all since last week, Sally, or is it still very much that nervousness every single day? You're still waking up in the morning seeing what these lenders are doing?
Yeah, I'm checking my inbox. I mean, yesterday we had three lenders. It was quite quiet immediately after the inflation announcement and then the base rate. I thought, I think we've got away with this, because they are changing all the time. And then yesterday, wham, 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 3 big lenders all changing, and some of them are going up to sort of 0.46, 0.47 increase. That's a lot. And of course,
on what kind of mortgage would that be?
That would be on a sort of 2-year or 5-year fix. Sorry. Immediately, of course, when the base rate goes up, tracker rate mortgages increase in line. Some lenders have chosen not to alter their standard variable rate, which normally gets affected by any hike in the base rate. Some are choosing to sit on that for a bit longer, but standard variable rates, SVRs, are as high as 7.75%. at the moment. So if you're on one of those types of mortgages, then you're paying an awful lot per month, an awful lot.
And Sally, so alongside, you mentioned some of those changes. So Santander will be getting details of its new mortgage increases later today. It's expected to remove some of those fixed rate packages, increase the cost of remortgaging as well. And there's Rory. Rory's been in touch. He's been at 85058 if you'd like to join in with the conversation. Rory says he's 50, he's in Surrey. He said, I've got a fantastic rate for my remortgage. Only downside is I have to live to 110 to pay it off.
Oh, God. Oh, Rory.
Yeah, I know.
Feel your pain.
Well, I mean, I'm sure Rory's in splendid health. But and Rory says, serious question, how much does a new bathroom add to a property? I'll ask you that now, Sally. We've got an estate agent coming on later as well. Would you have an answer as to whether a new bathroom improves the value of your property or not?
Yes, it does. But what we've got to sort of work out is if you're borrowing money to do that bathroom up, you've got to do your sums, because, the cost of borrowing the money to do the bathroom might mean that your return is diminished, or actually, you're just sort of even Stevens. So yeah, look into it. If you've got the savings, then yes, you're probably, it's a very, very good idea. And of course, having the best bathroom on the street is going to knock the competition out of the water. So if you actually want to sell, then yes, it might be a good idea. If you're looking at remortgaging, it doesn't make a blind bit of difference.
What are you thinking, Rory? Roll top bath? Just extended shower? Let me know. Yeah. I want the detail. 85058 if you've got more questions on buying, selling, renting. Sally, we've also had, alongside all of those daily changes in those offers that are out there, Jeremy Hunt has unveiled, what he's calling, our Chancellor unveiled his mortgage charter.
Yes.
What to you does that mean? Because he says that it's got the support of 85% of lenders. It aims to ease the financial pressures on homeowners. What does that mean for people who are maybe in a bit of a pickle at the moment?
Yeah. Well, first of all, I really welcome the conversation. I welcome the attitude, the attempt at help. How the lenders actually interpret this charter is really up for, discovery and debate. I think we're going to find out over the next 2 weeks how they actually interpret it, because it's not mandatory. 85% supposedly have signed up to it, but actually the government doesn't have any power to say you must do this and this is the way you must do it. I think that being able to swap onto interest only for a short term is great. I think that extending your term is great as a short-term fix. It's something that we've been suggesting as brokers for the last 8 months, ever since people first found things very, very difficult after the mini budget. And the stay of execution, if you like, from repossession, if you default, of 12 months, fab. But I think there needs to be some more help before you get to that point, because once you're at that point, it's very, very difficult and very depressing. But in 12 months, anything can happen. If you were unlucky enough to lose your job or be made redundant or have a period of ill health, having a year to get yourself back together without losing your home, I think is a really positive thing. But as I say, I'd like to see what's happening.
In that, Sally, can you explain how your credit profile may be impacted at what stage of the journey there?
Well, the minute you default, the minute you miss a payment, your credit file is impacted, and that's impacted for 6 years. So although it won't stop you getting a mortgage in the future necessarily, you would probably have to go to a more specialist lender, not a vanilla high street one. And that carries a tariff, that carries an extra percentage point or 2 percentage points on your mortgage rate. So
because a lot of the chat has been
to be avoided.
Taking advantage of this mortgage charter, and some of those things you talk about there won't affect your credit rating.
No.
But do you actually think that will be the case? You call up your lender, you say, I'm really struggling to make my payments right now. Does the lender... I know we have a credit rating that's that official rating in a database somewhere, but would the lender start treating you differently?
Well, apparently not. I mean, I think this is the sort of crux of this charter, that it mustn't impact. I mean, if you go on to interest only or change your term, it doesn't affect your credit report. So if anyone else is searching through the multi agencies, they're not going to see any difference in your scoring, and that's always been the case. So I think that big flag of don't worry, it's not going to affect your credit file is a little bit of a red herring to me, in my opinion. But do you think there's a secret sort of book where the good and the bad are written down? Only the lenders can answer that.
Sally, thank you so much. I mean, there will be many more questions coming through. No doubt we will speak again. Have a good day. Keep an eye on that inbox. Sally Mitchell, senior broker at The Mortgage Mum.